Thank you. Thank you to all of you who are here for this timely and inspiring summit, and thank you to the Economist group. My name is Schoenfeld. I'm the Chief Executive of MarketVector Indexes. MarketVector is a global index and data provider with offices in New York and Frankfurt, Germany. We serve over 100 financial institutions worldwide, asset managers, fund managers, wealth managers. We provide over 200 indexes and over $30 billion of indexed assets tracking our indexes in licensed products. I'm very proud to be speaking on this topic today here at this forum because some of our first indexes was for this region. We started with Israel indexes, Egyptian indexes, and an index for the Middle East and Mediterranean region. The idea of investing at the intersection of geopolitics and changing economic environment is a fascinating area for investors. And all three of the countries that are under focus here have substantial long-term potential in the energy field, which has been very well covered today, in technology, which has also been touched upon, the strategic location of all three countries, very relevant for shipping, aviation, and logistics. And not as touched upon was the new alliances. Of course, Israel, Greece, Cyprus, +1, the United States. Egypt is also deeply involved in this cooperation, and the Abraham Accords, which extends the current three countries' sort of scope to the center of the Gulf, and there's lots of opportunities there. I want to bring an investor and an indexer perspective to this conversation. If I use a few buzzwords, I apologize, and we can address them. But just to sort of set the parameters, Israel is considered a developed market in the eyes of global investors. It graduated from being an emerging market to a developed market in 2010 and 2011. Greece, very interestingly, graduated in 2001 when it joined the Eurozone. Unfortunately, because of the economic crisis, it was demoted back to emerging status and is now considered an advanced emerging market. Cyprus has a very small stock market. It's considered a frontier market, and it's actually one of the smaller frontier markets, about 1% of frontier market capitalization. But each of these countries have significant players in key sectors. I mentioned energy, finance and banking are amongst the highest represented sectors. Technology, especially Israeli companies, but also some Greek and Cypriot companies, and in the area of security. So these are sectors that you could find very interesting companies in the stock markets of these three countries. The credit ratings of all three of these countries is actually quite good. They're all investment grade. Both Greece and Cyprus are on a positive outlook. Israel has been on a higher level, but has actually been downgraded to stable because of some of the current political conditions. Again, in this short time, I'm not going to give you my full assessment of the market conditions, but Israel is absorbing the blows of correction in the tech markets. Israel has not recovered as much as tech stocks in the United States and Europe, partly because of some of the political issues going on in Israel with regard to political reform, and also the weak shekel has been hurting returns. Greece, to the surprise of many investors, but probably not as much to the people in this room, has had excellent 1-year, 3-year, and 5-year performance. There are those who are considering Greece might be up for another graduation to developed markets. It will take a higher hurdle for that to happen, but I do think it's possible. Cyprus, as I mentioned, is a very small market, very strong cross-holdings between the major companies, and those will need to be worked out before it really is able to enter investor portfolios. There are some lessons to learn from Greece's and Israel's graduation to developed markets. For Greece, it really is simply don't graduate too early. The Greek government was very aggressive in trying to push Greece into the developed market status. It thought it would benefit from that. In the end, it was too early and was demoted back to emerging markets. Now Greece's economic house really seems to be in order, so another opportunity might present itself. Israel had a different situation. Israel very much was qualified and did want to graduate, but was a little bit ambivalent because it was a medium-sized fish in the emerging market universe. And when it graduated to developed markets, it became a tiny minnow amongst France and the UK and the United States and Japan. So Israel actually lost some investment. The other reason why there was some complexity is that many Israeli tech stocks are listed outside of Israel and didn't count in some measures. And so where we stand now and what I want to leave you with is, what are some of the investment approaches you could take for Israel or Greece? Israel, you could take a broad approach and invest in the entire market. There are ETFs for that and funds. You can also take a narrow tech approach. There are 2 ETFs for Israeli tech. I'm happy to say that in the room are those who represent the two ETFs. Welcome, Kathy. And then we've also produced some indexes for the region. We created a prototype Eastern Mediterranean Energy Index, which is just a prototype. We believe in the concept. Nobody has launched a fund on this index yet. We also have in the lab, we have a Mediterranean Regional Index. There used to be one. It was decommissioned 2 years ago, and we think that it's a good opportunity to consider it. Finally, another area that we're working on is something called economic exposure indexes. We already have these indexes for Israel, for Brazil, Korea, and the UK, but I do believe that Greece could be an opportunity for this index too. It separates the globally focused parts of an economy with the domestic part of the economy, creating 2 complementary indexes, and we'd love to speak with people about that during this conference and afterwards. 5 minutes is a very short time to give you an investment overview of 3 very complex countries, but I really appreciate the opportunity to have given it a try. Thank you.